What do you make of stocks right now? Would you warn investors about the duration of the year? Has it created opportunities for you?
Yeah, there's emerging opportunities in the market. We're at the beginning, early stages of a regime change. So from a Fed easing, accommodative bond buying set of policies to one that's the opposite. So draining the Fed balance sheet or down, raising interest rates, and that raises the possibility that they can make a mistake. I mean, they're not flawless, obviously, and so you've got what's happening with volatility is you're getting some probability of a mistake, of recession priced in, and that's I think something that you're going to have to live with for a while until it's clear that doesn't happen.
Yeah, so are you in the recession camp? You know, we are all watching the yield curve. We all have memories of the past decade when the Fed tightened too quickly and had to keep undoing that. So do you think investors should be braced for that possibility, or do you think that it's not going to happen, it's just creating some entry points?
You know, I mean, one of the things that we try and do is try and not make forecasts about what's going to happen, just try to understand what is happening. So what is happening is the Fed is signaling a tighter monetary policy. What is happening is the economy is very strong, unemployment's low, earnings for many companies are at records. State tax receipts are rising way above expectations. Credit card usage is high. And so all of those things, the stimulus is tremendous. So all those things say that the economy is strong and a recession is not on the horizon. Doesn't mean it can't appear, but that's what's going on now, and we're trying to invest in this particular environment, and not one that we really can't forecast.
Do you have to take a view on rates here? You know, we've talked for many years about how there was less and less value in things like the 10-year. But again, in not wanting to forecast, you still have to pick stocks. So what do you make of rates here? What would you tell people?
Well, real rates are still sharply negative, and especially if you just use headline inflation. So I don't think the bond market is attractive at all. I think the Fed wants to tighten. They would probably like to see the curve steepen moderately, and we just don't see any value in bonds here.
One more question on that. Do you have a point of view on whether it'd be better for them to run down the balance sheet? Some say maybe that would help long-end rates go up. It would unflatten the curve, but who knows, right? Or would you prefer to see more rate hikes, 50 basis point rate hikes, anything there that you're watching?
Well, you know, we've been kind of wondering why they're still buying mortgage-backed securities into this kind of a housing market. So I think both of those things in moderation make sense. So letting the balance sheet drain off of some of the securities that they own, as well as moderate tightening. They're signaling very strongly that they're not going to try and tighten too much. They're going to be sensitive to a recession. Doesn't mean they'll get it right, but I think they're looking at the right things.